So at this time, I will turn it over to Regina, who is one of the financial counselors with the Pittsburgh Financial Empowerment Center. They provide great one-on-one financial counseling support for any adults in the area and are also great speakers whenever we have a webinar. So Regina, please educate us all about credit.
I would love to do that. Thank you, Katie. Good afternoon, everybody. My name is Regina, and Katie already said all of the highlights. We're going to talk a lot about credit today, but really what I would like to ask any of you to do is at any point in time during the presentation, if a question comes to mind, throw it into the chat box, raise your hand, anything that you need to do. You don't need to wait until the end. I know the way I operate is when someone makes a point, if it makes me curious, I want to know right there what they're talking about. So please interrupt. Any questions regarding the Financial Empowerment Center, our credit discussion to come, me personally or professionally, because I would love to talk to you about what we do at the Financial Empowerment Center and what makes it so that I think that we are a good group. And I personally have been a financial, credit, and housing counselor for about 15 years. So I still have much to learn, but there's, I'm on the way. So again, interrupt me with any questions you have. I'm going to share my screen, which is going to bring up our credit presentation. And in closing things up a little bit to make it a little tighter, I think what I'm going to do is, Katie, if someone does raise a hand and I don't see it, just stop me, okay? So here's what we're going to do. We're going to talk about credit today. And this is actually the second step in a series that we've got. And it's actually the one that I like the most because credit is really kind of interesting for a couple of reasons. One is there is a lot of misinformation about credit reports, and credit scores. Did I say a lot? I mean a ton of misinformation of everything in the financial world. Also, it's the biggest victim of scammers. There are a lot of scammers out there who promise to fix your credit, rebuild your credit, that kind of stuff. And they charge you money and they usually dispense awful advice. And I know I'm, not a teenager, but I also think that for the most part, TikTok advice is not the best of advice, but we can go on about that in just a little bit. Let's talk about understanding credit, understanding the fundamentals of building credit, understanding your scores, understanding a credit report, and showing you how to even read it. So here's our kind of loose agenda today. Again, at any point, this can be interrupted. We're going to define what credit is. We're going to talk about the cost of credit, how to read a credit report. It is a little challenging if you don't have somebody kind of showing you the ropes. The best methods of improving your credit score and your next steps. And I mentioned real quickly this methods of improving your score. That's always a safe thing to say because credit scores go from 300 to 850. And in my years as a credit counselor, I've never seen a 300, nor have I ever seen an 850. So I say everybody, even if your score is great, it can be improved. I'd like to see somebody hit that 850. So let's talk about the basics. What is credit? And do you know all there is to know when you use a credit card or take out a loan? Credit, short and simple, is this: a promise to someone that you can walk away with the product now, pay for it later. If we all had millions of dollars in $10 bills, we would never need credit. But there are some items that you simply don't have enough cash to pay for, and that is the basis behind credit. Credit is not a new thing. Credit has actually been around for thousands of years. When the slide show's over, I'll show you the original credit card receipt. And I'm afraid if I were to show it now, I wouldn't be able to get the slideshow back. But yeah, credit has been around since before the Common Era and back in ancient Babylon, actually. So what is credit exactly? Credit is not extra money. There are a lot of folks out there who think that if they have a credit card with a $500 credit limit, they have $500 extra dollars, and you don't. It's not extra money. It also isn't unnecessary. I have to admit, I long for the days when it was unnecessary, when we were just a cash society. Things were a little easier then. But in this day and age, credit is incredibly important. It's necessary for something as simple as reserving a hotel room or buying a car. Credit isn't just for buying a car or a house. It can be for all things in between. Credit isn't confusing. I kind of take issue with this one because it can be if you don't have somebody explain it to you properly. So in those scammers that I mentioned earlier and the viral videos, they tend to make it confusing, but hopefully this little seminar will straighten things out for you. And it isn't kept a secret either, even though people don't usually walk around boasting about their credit scores. For the most part, knowing what good credit is kind of takes some of the fear and shame out of it. Credit can be helpful for large purchases. For most of us, it can actually be necessary for large purchases. Me personally, I don't know anyone who can buy a house with cash, and not too many who can buy a car with cash. So credit is really helpful for things like that. I also have a little issue with this one. It can be established over time. I would say it must be established over time. One can't go from having no credit to having great credit in 1 month's time. It takes time. Credit can also give you access to better credit, because when you show that you can repay a small loan, then you can get a bigger loan or a bigger car or eventually a house. Credit can be needed if you get a job or rent an apartment. Almost always for renting an apartment, a landlord will pull that credit. They want to know, is this a person who's dependable for paying this money back? Some jobs, and we can talk about this in a bit if there are any questions, some jobs you give them permission to pull your credit when you fill out that job application. And credit should be reviewed annually, actually even more often than that. And if any of you are clients of the Financial Empowerment Center or decide to become clients of ours, we usually meet monthly and we pull that credit report every month, review it with you every month, and let you know what your standing is. So let's talk about the types of credit there are out there. It really is this simple. 2 kinds, secured and unsecured. Simple way of thinking about it is the secured credit means that there is an asset that is collateral. So credit given by a lender in exchange for an asset. Ideas of secured credit would be a car. You take out a car loan, the car is the asset. It's the collateral. A mortgage, the house is the collateral as well. So usually secured credit doesn't fluctuate over time. If any of you have car payments, you've probably been making that same number, that same payment month after month after month until the car is paid off. Houses are usually like this as well. Mortgage payments change very little, and if they do, it's because property taxes, but they usually don't fluctuate over time. They are less risky for the lender. I almost want to ask a question. Does anyone know why secured credit is not so risky? And I can't see if anybody's raising hands or anything like that. I'll tell you why. The reason why is because if you don't pay, they get that collateral back. If you miss a car payment, they're going to come and get your car. If you miss the house payment, a certain number of them, not just one, they'll take the house back. So they're not so risky. Failure to pay secured lines of credit will result in the seizure of your collateral, a repo, or a foreclosure. And examples are auto loans, mortgages, home equity loans. So secured credit has an item behind it that can be taken back. Unsecured credit is actually what gets most of us in trouble. There is no collateral behind your unsecured credit. Think about your credit cards. When you go to Macy's and you swipe that credit card and you buy yourself a pair of socks, those socks go into your sock drawer. But if you don't pay that loan, the credit card company is not coming back to get your socks. They don't really want that. If you took out a student loan, it is unsecured credit. They're not going to come knock on the door and take your diploma back. So it is backed by nothing other than your good word. The interest rate may not be set. In fact, it usually is not set. Credit card interest rates fluctuate greatly. They're on the uptick now. They're somewhere around 27. I've seen some into the 30%. Whereas again, secured credit, you usually have a fixed rate. The lender will have more criteria to gauge your creditworthiness. So before you get a credit card, they want to check your score. They want to check your credit and see if you're dependable for paying things back. But they might also want to know about your income. Do you actually have enough money to pay this back? Failure to pay can result in, not can, it will, late fees. Your credit score is going to fall. Sometimes it goes to the magistrate and there are court hearings. So a late payment with an unsecured credit is going to have a fee. Your score is going to drop because your payment has not been made on time. Whereas secured, a couple of missed payments, it will ding your credit, but if you miss them completely, they're just going to come back and take what it is that they gave you that money for. So secured, think houses and cars. Unsecured, think credit cards. They don't want anything back. Any questions so far? Okay, so let's talk about the cost of credit. And I'm not going to throw this question out, but I'm sure that some of you have heard about ways to raise your credit, some of which are valid and some are not so valid. But let's talk about the cost of credit. The cost involved is essentially your interest rate. Before I explain this chart, I think you all know that the higher your credit score, the more creditworthy you are. And the higher your credit score is, the lower an interest rate that you're going to pay. So this is what the earlier slide said, is it gives you access to more and better credit. Here's a good example. You need a car to get to work. The car costs a beautiful $5,000. I'd like to see one of those. The loan is for 2 years. So if you have a really good credit score, and that score isn't just a number, it's the report that says this person pays their debts on time. If you've got a good credit score, your interest rate might be 5%. If your score is a little lower in the 400s or 500s, you might be paying 25% interest on that car. But you can see that over the life of the loan, after 2 years of making payments, having a good credit score and a 5% interest rate, you're actually only going to pay $527 extra for interest. The higher the interest rate goes, the more you pay. And if you had to get a loan at a 25% rate, you pay almost $3,000 in interest. Now, most people don't talk about this kind of stuff with people. That's why we talk about it being secretive. You don't share interest rates with friends for the most part. But again, the higher your score, it just shows a dependability and it makes it easier to build off of the top of that. Okay, moving on. Having bad credit, and I'm glad that's in quotations because that's in the eye of the beholder, it can raise your interest rate on the loan, causing you to pay a lot more overall. It can cause a denial for certain products, which means if you try to go get a car that you absolutely love and they pull your report and they see that you're in the low 400s, 300s, you may not get that car loan at all, which in a way can be a saving grace, because sometimes if your score is very bad and you end up getting that car loan, you end up getting a terrible interest rate. And sometimes that even puts you further in debt. Bad credit can also increase the amount of service fees. So if you do get that car loan, if they think that you are risky, and the risky factor is based upon what your credit report says overall, they can throw little extra fees in there. They're allowed. Now, having no credit is very different from having bad credit. When we were all 15-year-olds at different times, of course, none of us had credit, all right? Because you're not buying cars, you're not taking out student loans, buying houses. And we were too young for credit cards for the most part. So if you have no credit, you can't buy a house, you can't buy a car, you can't buy any big ticket items, and you can't get rent or utilities in your own name. Having no credit is called being credit invisible. It's not a bad thing though, guys. If I had to choose between having bad credit and having no credit and being credit invisible is actually a pretty easy thing to fix if you know the right way to do it. Okay. Having bad credit, you can always repair your score and bring it back up and maybe hit that 850, but you have to take a different course. So being credit invisible and having poor credit, you'll have two different roadmaps to get you to good credit. I'd love to talk more about this. Hopefully you'll have questions about being credit invisible at the end, because again, there's a particular route that you would take to build your credit score. So let's talk about credit reports and credit scores. What is the score? What is a report? They are not one and the same. And how do you read a credit report? Well, I will let you all know, first of all, you may probably already know this, there are 3 different credit reports out there. There are 3 different credit reporting bureaus. They are TransUnion, Experian, and Equifax. And each of those organizations put your report together. And if I were to show you all 3 of those reports on any given day, if I were to show you my TransUnion, my Experian, my Equifax, they're all slightly different, okay? And there are different reasons. You're going to get a different score from each of those. So you have to learn how to read each of these independent reports and see what those scores are that go into it. So here's what we've got. The credit report itself is just that, the report. It's a document, all right? It details the state of your credit activity. Not only does it say if you made that car payment on time every month, which is your payment history, it also shows your utilization, which is the percentage of your credit cards that you are using. If your cards are maxed out or not, or your history of inquiries, which is the hard pulls that we have. Bernice, this is a great time to have your question. Katie, can you unmute Bernice so I can hear a question?
Hi, Ms. Regina. I was calling, I wanted to ask a question about Experian. It seems like my score is way higher on that, on there, and then the other ones are like way lower.
Yeah. Well, that's a great question, Bernice, because I hear this from people all the time. So there are a couple of factors that go into this. First of all, TransUnion, Experian, Equifax, not only do they have 3 different formats for how they show the reports, and I'm going to have a screen in just a little bit that shows you that, but they also have their own set of algorithms, which means they weigh things differently. If all of us in this webinar were sitting around a table and someone served us brownies for a taste test, one of us might say this one's too chocolatey or this one needs more nuts. The credit bureaus do the same sort of things. They weigh different factors more importantly than the other. But this is something, Bernice, that most people don't know. And that is that different reports show up on your 3 credit reports. Here's what I mean. Every month when I make my car payment, I send my payment to the car dealer. The car dealer holds on to my payment, usually for like 15 days to make sure it's not late. And then all at once, they then send that report once a month to TransUnion, Experian, and Equifax that say, okay, Regina paid her car on time this month. Most people don't know this though, but my car lender has to actually pay TransUnion, Experian, and Equifax. It's like a fraction of a penny. It's not much at all, but they send money when they send that report as well. Some creditors, some car dealers, some credit cards, even some mortgage companies, they only report to TransUnion or Experian and Equifax, but not TransUnion. So the best way to find out about this particular issue, Bernice, is to get all 3 of your credit reports side by side. And I'll show you how in just a second, and compare. Is my car loan on this one? Is it on this one? Is it on this one? Is my Macy's card on this one? Oh, look, Macy's only reports to Experian, not to TransUnion. So when you're measuring different ingredients, that's another cause for having different scores.
Okay, so you can't raise the other 2.
Well, the thing is you have to look at them independently, though. Yeah, you have to look at them independently. But the other thing, too, I would want to mention, a lot of people also think one of the credit reports is more important than the other, and they're not. They're all equally important.
Okay, thank you.
Go ahead. The other thing, too, is depending upon why you need good credit. This sounds like a silly thing to say, but if you want to get good credit to get a mortgage, for example, a mortgage lender is going to pull what's called a tri-merge, which is all 3 of those reports, and they mash them in together and get the middle number. That's the one that's used. And that's why it's a good thing that they do that often, Bernice, because sometimes one of those is usually a much lower score. Sometimes one is much higher. They'll use the one in the middle. Did that help?
Yes, thank you.
Sure. Keep asking questions. So let's get back to what the reports themselves are, because that was a perfect inroad to that, actually, Bernice. The reports are the actual paper documents, just like you had to write a report for your English class in 10th grade. It says, here is my payment history. Here's the fact that I make all my payments on time. Here's how much of my credit I use. And the history of inquiries, this is something that I wanted to mention, is anytime you look to get credit, like if I go out to get a car loan and they pull my credit, It's called an inquiry. It's also called a hard pull, and it actually bumps my score down a little bit. That stays on my report for 2 years. The inquiries do. And sometimes if you have too many, it looks like, man, this lady's desperate to get credit. You really don't want to have an inquiry more than once every few years. Again, the inquiries stay on for 2 years. Other information stays on for 7 years. And this says bad information stays on for 7 years. Basically, so does good information, even if it's closed. So if I paid off my car last year, it's still going to show up on my report for 6 more years. But if I paid off my car, or if my car was repossessed 5 years ago, it's still on my report, but after 7 years, it's going to disappear. And that repo officially never happened. Good information stays on your report as long as it's still active. So if you've had a credit card for 10 years, as long as you have that card and it is open, it will stay there forever. I often joke with some of my clients that I've got credit cards older than them, but having a long credit history is a good thing too. So the report is the actual paper that shows how you're behaving in the credit world. The score is the grade you got on that paper. It's the rating that is relative to all of the factors inside there, whether your payments are made on time. If you have too much credit utilization, that's going to change your score, which is your grade. The suggestion is to check your credit reports annually to make sure that the information on them is correct. But actually, again, if you work with the Financial Empowerment Center, we'll check them with you and for you monthly. And I think there's a correction on one of the upcoming slides that you can actually check your credit report weekly, but I'll tell you about that. So credit reports and scores, here are the things that show up on your credit report. Mortgages, installment loans. And remember, the installment means it's the same amount every month. Your student loan payment's always the same. Your car payment's always the same. Revolving credit, which are the credit card balances, and they're called revolving because the balances fluctuate. They go up and down. Also, unfortunately, collections accounts show up on your credit report. And we can talk a lot about collections accounts. I'd love to see a question or two about them because there's a lot of misinformation about them. But the collection account basically is there because when I had the baby and I had a $3,000 bill for the hospital, they sent me the bill and I said, no, my insurance is going to cover it. I threw that bill away. And after sending me enough of those bills, the hospital said, to heck with it, we want our money. They sold it to a collection account. So the original hospital bill doesn't show up on the credit report, but once it goes into collections, it does. And here's the other bad news. Here's what doesn't show up on your credit report. Most of the stuff that we pay for every month. Groceries don't show up. Your cell phone doesn't show up unless it's in collections. Your rent doesn't show up, with some exceptions. Some rental agencies I've noticed lately are helping people build and establish credit by reporting their rent paid on time. Same thing with utilities. Your gas bill, your electric bill, your water bill, unless they are self-reported, they will not show up either. And there are some changes happening in that world, but those are the places that do show up and don't show up. So I know I've mentioned this a few times. I'm going to mention it again now. Here's how to check your credit report. There's only one place, truthfully. It's not Credit Karma. And if anyone wants to ask about that later, I'll gladly tell you why I don't like it. The only place to check your credit report is through annualcreditreport.com. The site's right there on the screen. Annualcreditreport.com basically is the government agency that helps every American get one free copy of your credit report from each of the 3 bureaus every single week. Now, before COVID, it was only once a year, okay? Now, if you get on annualcreditreport.com, and you can do it online, my suggestion is to monitor your own credit. And you don't need to pay someone to do it. You can monitor your own credit, guys, every Friday or every other Friday, whatever works for you. Get on this site, and let's say the first Friday of the week, check your TransUnion report, and it'll show you your activity up to that point. The following week, check your Experian, then your Equifax. Just kind of rotate. That way you're kind of keeping them in check, and you're making sure that your identity is sound and that you're getting credit for the payments that you're making on time. Annualcreditreport.com does not give you your score, however, but when you have a good understanding of what goes into your credit, you don't need your score. And I'll talk to you more about that in a little bit. Again, it's annualcreditreport.com. They have a phone number, or you can even send in a paper version to request your credit report. But that's really the best thing to do. And on top of that, I always recommend that everybody, and I'm not sure if there's a slide that says this, I recommend that everybody freeze their credit as well. Now, freezing your credit through all three bureaus, TransUnion, Experian, and Equifax, is a very easy, free thing to do. All it means is that someone can't open up an account with your personal information, your social security number and your birthday and your address. You can't even open up your own because your credit is frozen. You're still getting credit for paying your car on time. All that behind the scenes stuff is still happening. Yeah, you paid the car on time and all that sort of stuff, but no new trade lines can be open if your credit is frozen. I'll gladly share that site with you if there's not a screen that mentions it, okay? So let's talk about those reports again. And this is elaborating on something I mentioned earlier when I answered Bernice's question. TransUnion, Experian, and Equifax have three completely different formats with the way that your credit reports are reported. Again, it's just like someone bakes a cake different than someone next to them. You can see this sample Experian report. If you look at all these lines, it goes month by month. It tells you you paid your car on time in May and June and July. So it tells you the way that works along those fashions. And the nice thing about it, if you can go back and say, oh, that's right, I was late last June, it should be on here, okay? But again, they just use slightly different ingredients when they do these. TransUnion is a very long report. I'll be honest with you, it's my favorite to recommend people to pull if you pull it yourself, because TransUnion has a nifty little feature that the other two don't have, and it tells you how much longer a report is going to stay on your credit report, a particular trade line. So let's say you had a repo 3 or 4 years ago. You always want to know, should I write to that company and deal with that repossession? But you know what? If it's close to that 7 years, don't touch it. You don't want to poke that bag of snakes, because if it's almost going to fall off, leave it alone, because when it falls off, it never happened and your score is going to bounce back. TransUnion does have that feature where they will tell you this will be on your report for this amount of time. I kind of like that about it. So let's talk about improving your score and what many of us think is a good score. And because that, as I mentioned earlier, is kind of in the eyes of the beholder. When you order your own credit report, or if you work with the Financial Empowerment Center and we order your score for you, we type in all of the pertinent information, name, address, birthday, social. There's not somebody in there crunching numbers to hurry up and come up with a score. What your score is based upon are these beautiful little components. The most important part of having a good credit score is making your payments on time every single month. Incidentally, if your car dealer has you making one payment a month, only make one payment a month, because that's what they expect from you. Same with your credit card payments, guys. If your credit card is due once a month, a lot of people like to pay their credit card every week. I would recommend against doing that, because they're just waiting for that, make sure that it comes in on the 21st so you don't get a late payment. So every month when you make your car payment on time, when you make your mortgage payment on time, when you make your credit card payment on time, as long as it shows up by the days due, it's like you get a gold star on your forehead, just like you did when you were in kindergarten. That's the most important thing. Slow and steady will bring your score up that way. The next biggest piece of this pie is amounts owed. Now that's 30%. That's a pretty big chunk of the pie too. But that one is basically all about your credit cards. Don't max them out. Always pay at least the minimum due and never spend 30% of your limit. Now, there are some people out there, and this is bad information, and I'll get to you, Bernice, I promise, as soon as I finish this. There's another piece of bad information that people say, if your credit card, if you have a credit limit of 1,000, use all 1,000, but pay it off every month. That's wrong. You should never use more than 30% of your limit. Okay, so if your credit card limit is 1,000, 30% of that means you should never spend more than $300 on that credit card. Use use no more than 30 so that you have credit available to you. That means that you're not such a risk for when you try to get more credit. It's like, oh yeah, she'll pay that loan off because she's got all that credit available. If by chance you spend more than that, you always want to make sure that you pay it down to that 30%. So even if you are kind of maxed out, paying it to get that limit 30% or below is going to benefit you greatly. So the payment history, like I said, slow and steady. You get one click per month. But if you manage to pay down your credit cards, that can be fast and furious. That's the fastest way to increase your score. I'll finish talking about the rest of the pie chart after I hear Bernice's question. Are you still there, Bernice? I'm sorry.
That's okay. I was just wanted to ask because I was doing what you were saying don't do. I always pay early, but then I continue to pay like every week, still pay more on it. But you're saying don't do that.
I wouldn't do that, Bernice, because in theory, when you signed up for that credit card or that car loan, you said, I will pay X amount per month. They expect that payment once a month. And this is kind of like, this is an advanced credit counseling, to be perfectly honest with you. When you pay that off is actually very important. So let's say your credit card, if your credit card's due on like the 20th, okay? You'd probably when do you send it in, Bernice? If 2 or 3 days before the due date?
No, the minute I see it say that it's due, I pay it.
Okay.
Like, I paid my one a couple weeks ago, and they said it wasn't due for 21 days, and I had paid it.
Okay.
So come due, I pay it.
Okay. Now I'm very happy to hear that. In fact, I wouldn't reprimand you for doing that. At least you're paying it on time, you're keeping the amounts owed low, which is wonderful. But if you want to get really skilled about it, there are 3 dates that matter with credit card payment, 3 things that matter with credit card payments. And one is the day that the payment is due. Okay. The other one is the day that they report it to the credit bureaus, because remember, your Visa card company or your MasterCard or whatever, they're not talking to Experian every day. All right. They just say, okay, we're collecting all the payments for this month. And if the payments are due on the 1st of the month, for example, they're going to hold on to that to the 15th to see who makes that payment. And then probably not till like the 20th or the 25th. That's when the credit card company is going to tell TransUnion, Experian, and Equifax. So having your balance at the fine line, because carrying over a tiny balance is good as long as you pay it off at the end of the month. And the other thing too about paying it just once, it makes your life simpler. When it comes to finances, simpler is better. That's why I always tell people to automatically put money into savings so you don't have to go and change it out by hand. One payment per month might make things easier for you, and it might also maximize your credit score. Ideally, we want to aim to pay off our credit cards every month, but if you carry that tiny bit of a balance right until the day it's due, that actually reflects better on you than paying every month.
Okay, thank you.
You're welcome. You're welcome. Yeah, that's a very subtle thing, but Bernice, just so you know, guys, what she's doing is the right thing. All righty, pay it off every month, and even if you paid off early, it's better than not paying it at all. So those 2 biggest pieces of the pie, paying on time, paying down your credit, are the most important things. The third runner-up is the one that I mentioned earlier, the length of your credit history. The longer you have an active trade line, the better off you are. So if you have one credit card you love and you've had it for 10 years, keep it, okay? And that 10-year-old credit card weighs more heavily than the old Navy card you just opened up last month, all righty? Because this is too new, all righty? Frequently, I'll have folks who have 8 or 9 credit cards and they decide that's too many, they can't manage it, and they want to close down a couple of them. One of the factors you want to look at is which ones have I had the longest, okay? Because if you have a nice old account, keep it. This is one of the reasons that mortgages, and I'm not saying everyone should go buy a house, but when you're a homeowner who pays their mortgage on time, you're destined to be the owner of a good credit score, because if you pay it on time every month, preferably automatically deducted, amounts owed, you pay it down every month. The longer you have it, the better. Most mortgages are 30 years old. Finally, you've got the 2 10% parts. One is the credit mix, which means it's good to have a variety of credit. It's good to have a student loan or two, a car loan, a couple credit cards, maybe a personal loan, maybe a mortgage, but you don't want to have just like 6 credit cards. All right. Even though, now here's a good point. As a matter of fact, if you have good 6 credit cards and you pay those babies on time every month, you pay them down every month. That's great. But somebody with 6 credit cards who has the good payment history will never have a score as good as somebody with 4 credit cards, 1 car loan, and 1 student loan. Same payment history. They pay both on time, but that credit mix, you just don't hit that if you have just 6 credit cards. That doesn't mean go out and buy a car or get a personal loan. That just means that somehow one of the subtleties, as I mentioned earlier about when to pay your credit cards, one of the subtleties is having a variety of credit. And that's something we can talk about later. Finally, 10% is new accounts. This goes back to those inquiries that I mentioned a little bit ago. You want to have new credit once in a blue moon. You don't want your account to get stale, but yet every time your credit is pulled, it is a hard pull. It's an inquiry and your score does fall a little bit. But just for the record, this is the way this goes too, is your score is stable if you have it pulled to get a car loan and you get that car loan. After 3 months of making the car loan payment on time, you're back where you started. And then after that, you're above it. Okay. So it's just like you get knocked down a little when they pull the score, but as you make the payments on time, you're very quickly back to where you were. And then you're above it and you're still flying. Okay. Now, credit scoring, this says it's a confusing system. I don't think it's terribly confusing, and maybe you don't either, but to some it is. But it is true. It's best to have the help of a financial counselor just to walk you through some of the little details. So the 3 different bureaus, TransUnion, Experian, and Equifax, have 3 different scores. I mentioned that to you earlier. There are also 2 different scoring systems. Now, I would not worry too much about this. But most of you, if you look on the left-hand side of your screen, most of you have heard about FICO scores. That's the Fair Isaac Corporation. Vantage scores have been around for a while, but they're kind of like the little brother of FICO scores. If you look this over, you can see that the scores run very much the same, 300 to 850. And what they classify as good and very good are slightly different as well. Vantage scores are just not as common as FICO scores. And when you pull your own score through your own report through annualcreditreport.com, you'll see the FICO score. The codes in the trade lines, this is why it's good to have a counselor. Codes in the trade lines are challenging to understand. A few slides back when I showed you the examples of those 3 credit reports, they're written differently, but sometimes you will see something for a MasterCard and it says like R, and then it'll be a slash and it'll say PB. They don't tell you what those codes mean, but we do know what those codes mean. And they tell you whether you're an authorized user. They tell you if something's been repossessed, but the codes are challenging. The other thing too, that is a little nuance, as it mentions, is the unreliable reporting. Now, this is not as common, but this is why it's really important to keep an eye on your own credit. Remember, I told you about paying that car loan on time, and my car lender holds on to those payments. And then once a month they report, they might forget to report, or they might have a problem in their books where they report you as late and you weren't late. So that does happen. There are errors on credit reports all the time. So it's important that, again, you check your own. And when you work with us, we check them monthly. Plus, again, as you know, all the bills you pay don't count towards your credit score. But if you don't pay those bills, you don't pay the doctor, you don't pay the dentist, you don't pay that Verizon account, they can go into collections, which will show up. And I know I showed you that little chart on the previous slide, but the way to raise your score is make your payments on time. If you did miss a month, get back on time and stay on time, because as each month passes, your score reflects your current activity, and something that you did in the past will eventually disappear. All right. Don't forget that 30% rule. Don't spend more than 30% of your available credit, but even if you do, you pay it down so that it's at that 30% or lower. I'm not a fan of carrying balances at all. as far as credit goes. And my clients all know that I tell them that I talk to my credit cards. If I'm in the checkout line and I pull out my credit card and I say, am I going to pay you off this month? Because carrying over a balance is going to have them add in fees, interest fees, and they don't need your money. MasterCard and Visa don't need your money. They have enough. Also, don't apply for multiple new accounts in a short period of time. That is too many inquiries. And don't close your unused credit cards. And there's an unless there, but I would not recommend that we do it. Now I'm going to open up the chat box to see who's where can you find the FICO score? Okay, good question. So as I mentioned, the bad news is when you pull it on annualcreditreport.com, you don't get a score. Okay, you just get the activity. And if you're following along, making on-time payments, you're paying below 30%, no inquiries, you know your score is going to be a good one. One of the best places, and this is always evolving as well, to get your score is a lot of credit card companies have their own, if you have a Discover card, they'll show you your score. They'll let you access your score. A lot of credit card companies do that. I would recommend you use something like that you know is safe rather than something like Credit Karma. Now, I might as well go on my little Credit Karma tirade right now, if that's okay with you guys. I recommended that you not use it for all sorts of reasons. Reason number one is that Credit Karma and other credit companies that sing on the television, I can start naming names, but I can't think of them offhand. First of all, if they give you your credit, oh yes, that's another one, the Sesame one. Thank you. Yeah, first of all, when you sign up for that, you also sign up giving them permission to sell absolutely all your private information, like everything, like your social security number, like everything that you know about you. In fact, if any of you, and you don't need to answer, because I did this about 10 years ago when clients first told me about Credit Karma. I thought, oh, what's up with this? I signed up. Within days, you start getting offers from Capital One. Open up a credit card. And you are inundated because they're selling all your personal information to the highest bidder. In fact, there was just a lawsuit settled within the past year where they had to pay out millions because a lot of their customers, had their scores fall because they were pre-approved for offers that they shouldn't have gotten, and their scores plummeted. So they sell your private information, first of all. Second of all, the scores that they use, and if any of you are involved in any of those companies, you've probably noticed the scores that they give you are not valid scores. All righty. They use what's called an in-file trade line score, which is something that kind of doesn't actually exist. When a car lender, if you go look for a car, what they use your scores, they crunch your number a certain way to see your installment loan debt. Mortgage companies do a similar thing. But what those companies do is they kind of use willy-nilly standards, and 10 times out of 10, when I'm working with a client and they said that they sign up for that and they just checked it this morning, when I pull their score, they say that is nothing like the score that you see on those sites. So again, working with us is the best way to get the score and have a good understanding of your report. But second to that, check with any of the credit cards that you currently have. See if they offer free credit reporting so that you can access I know that, I think 2 of my credit cards do, that they tell you what my score is on a monthly basis. I'm not so devoted to that magic number because credit, again, it's not a magic number as much as I am the activity. What's going on here? Wait, there's a JCPenney's card. I didn't open one up. That's the real benefit to keeping an eye on your score. I hope that answered the question. Okay, moving on. You know how to raise the score. Make your payments on time. If you fall behind, get back on time. Pay those credit cards down. Doreen, what is your question, my dear?
So if there is someone who signed on with any of these, like Credit Karma, what did the other person say, Sesame, whatever?
Yeah.
How do they get away from that?
It's a great question because it's not very easy. When they send you an update or the next time you log on, you have to scroll way to the bottom, and their unsubscribe link is very tiny, okay? and you click on that link. But then the other thing that you need to do is you need to follow up with it to make sure that you have been unsubscribed. And before you unsubscribe, I would get in there and wipe your information clean, wipe out your social, wipe out all of your address. They can have your name. You can't do too much harm with just a name, but then follow that unsubscribe link, and that should help you get there. Is that good?
Yes.
Okay. All right. So best way to build credit. Good question, Angel, because actually, I don't know if there's something in a slide in here that talks about this. So let's jump back and talk about, so we're talking about improving your score. Stick with all of these issues. Pay on time, stay on time. Those are for folks who want to increase their score, whether it's low or whether it's great. Again, I've never seen an 850. But if you are credit invisible, you don't exist yet, which is really kind of nice because you can pop in any way that you like. Here's the best way to build your score if you have no score. Okay. And it's also sometimes applicable for people who have poor scores who want to increase them. There's something out there that's called a secured credit card. Now, they're not all the same. That's like saying, you know, there's a house. Not all houses are the same. Secured credit cards are like a credit card, but it's like a credit card with training wheels. Because if you're credit invisible, nobody knows, hey, is this person going to pay this debt back or not? You know, are they dependable? So what a secured credit card does is they require a deposit. So this all starts, and I want to back up with something that we're not even talking about today, but it's good money management. With my clients who are credit invisible, it starts with watching your money, setting money aside into savings. When you have money set aside into savings, you can then apply for a secured credit card, because what you have to do is you have to send them your credit limit. Most folks start with like $300, sometimes $500. Sometimes I've got people who make great money but have no credit. They can send $1,000. So you find a secure credit card, and we can talk more about this if time allows. And that secured credit card has to have a couple of important features. Number one, they're going to hold on to your money, but after you make those payments on time for usually a year, sometimes it's even 6 months, when the payments are on time for that long, they send your money back to you. But here's the most important thing that secured credit card has to do. They have to promise to report you to TransUnion, Experian, and Equifax. Remember, based upon a question I answered earlier, not all credit cards report to them. I had a client a few years ago who said, hey, Regina, I'm going to start building my credit. I got a Sunoco credit card, which is nice because we all need gas in our car, but Sunoco doesn't report to any of those credit bureaus. So this poor character was doing a great job buying gas and paying it off every month. They were never getting credit for it. So you have to get a secured credit card company that reports to the three main trade lines, to the credit bureaus, TransUnion, Experian, and Equifax. You want one that's going to give you credit for making your payment on time every month. That's the real key to it, because if you do, they will send your deposit back to you. So it's basically like switching it from one bank account to another. But the important thing is, if you're sending them $300, remember, you don't ever want to spend more than how much? 30% of that. So if you send them $300, you can never spend more than $90 on that account, on that credit card. Pay it off every month. I tell most folks, get a secured credit card and go buy a Snickers bar or a pair of socks. And really, it can be $1. It can be $1.50. They don't care. What's important is you pay it on time and you pay it off every month. And then you get that gold star on your forehead. And you do that the entire time. Once you hit their 1 year or 6 month limit, they will send your money back to you, and then your credit card is converted from a secured card to a regular card. And you went from being invisible to having one really good trade line that fast. I don't ever make promises because credit work is up to you, the credit holder, but I have had a multitude of clients who have been credit invisible. And after opening up a secured credit card and using it very carefully for about, it's question time anyway. After using a secured credit card very carefully for a year, they get their deposit returned to them. But I've seen folks within 3 months going from being invisible to having 700s. I know that's hard to believe, but it's true.
Can
Now,
that
that's
work also if you have credit?
say that one more time.
Can you do that if you also already have credit?
Yes, because some secured credit cards, if you, in fact, what I would do is I would recommend doing a search, okay, that says best secured credit cards. And remember what you're looking for. Do they return my deposit? Do they report to all 3 credit bureaus? And you'll see that a lot of those that come up, they're ads, of course. They'll tell you what their interest rate is. They'll tell you if there's an annual fee, but they tell you who they're good for. They're good for people with no credit or poor credit. Usually, if you've got a 700 score already, you don't need a secured credit card, okay? But it's a great way to build either from being invisible or from being poor. But again, they must report to the credit bureaus, to the 3 credit bureaus. They must return your deposit, and you, who are opening this card, must pay it off every month and must never, ever, ever use more than 1/3 of it, okay? Because I have also had folks where this has happened, where they missed a payment, they don't get their deposit back, and you want your deposit back, okay? And you want them to tell on you for saying, yep, they paid that on time, this every month.
Okay, thank you.
Sure. So what I'd like to do is, I see everyone's got a muted microphone. Please, by all means, because we have a few minutes left, Katie, if I have your okay. And actually, Katie, did you receive any questions? There you are. Did you receive any questions in advance of this webinar that maybe we haven't hit yet?
I did, but we talked about most of them. I think the one that we maybe didn't entirely touch was how to recover from identity theft. And can you maybe talk about how you can identify if there was identity theft with your credit report?
That's absolutely, absolutely a great question. So first of all, I'm going to mention what I had said earlier. Freeze your credit. All righty. Now, the Federal Trade Commission, the FTC, that's a great name to remember, because you would go through them to freeze your credit and get information, as well as the Consumer Financial Protection Bureau. But if you are the victim of identity theft, which if you're frozen, it can't happen. In fact, if you're a client of mine and you freeze your credit report, I can't even pull your credit report. Okay. So it's so simple. It's so free. So do a freeze. But if you unfreeze, check your credit, and you see that there's a credit card there that you didn't have before, or that your balances have gone up, you would get in touch with the Federal Trade Commission immediately. They have a little, and that's one highlight to the fact that scammers are so, I mean, they're everywhere, guys, is that the protections are there now too, okay? If you get on the FTC, they've got a separate link to what to do if you are the victim of identity theft. And the nice thing about, this is a hard thing to say, nice thing about using credit cards is if that is part of your identity theft, if somebody had charges on your card that were not yours, those are protected and you will get that money back. Okay. You'll never get cash back if you lose cash, I'm sorry to say. But your credit cards, that's why I review your statements every month. Check your credit scores weekly if you want to, monthly if you want to, but the easiest protection really is putting a freeze on that. That's really going to be something that could save a lot of trouble to begin with. Okay. So what else do I have?
Jerry, I see that you unmuted. Do you have something that you wanted to ask?
Yes, I was wondering, my son's 30 years old. He has ADHD and Asperger's and stuff. I guess he would have invisible credit and stuff, but he does have bank accounts and credit union accounts, and he does use a Mac card and stuff. Would that help with his credit at all?
That's a really great question. And the unfortunate answer is no. Banking information does not show up on your credit report at all. Yeah, the credit what shows up again are recurring debts that you pay. And somebody had asked in the chat box about a 2-year loan, a car loan, a personal loan. So bank accounts don't show up on there. There's information that is protected from showing up on your credit report. Your sexual orientation doesn't show up on your credit report. Doesn't tell them how many kids you have at home. Really, it just has your basic demographic, your name. If I tell you what, when I got this job with the Financial Empowerment Center, they pulled my credit, and a lot of jobs do that. If you work for the banking organizations, they do. They will pull your credit to make sure that you're a safe bet. And when a particular organization pulls your credit report, their name stays on there sometimes too. Or if I go out and buy a car and I show, well, I'm employed, I can afford to repay this card, my employer will show up as well. So sometimes the addresses that you live at when you pull that report show up. Your employment information shows up sometimes, but not always. But no, banking information will not show up. But it sounds as though if in fact you can find out if your credit is invisible by going on annualcreditreport.com. All righty. And if you have a credit file anywhere in the universe, they'll have it. And if they don't, that means that your credit invisible. And again, a secured card is a good place to start, not stop. Angel asked a question about the long-term installment loan. 5-year loan is, well, it's what makes them the same is if you're paying them on time all the time, but what makes them different is the amount of time that it shows up on your report. And if you remember, 15% of your report is the longer the credit is, the better off you are. So if you're to the point that you can play with the numbers and see how much you're going to pay overall, if you guys are good with managing your money, a 5-year loan, the payment will be lower than a 2-year loan if it's for the same amount, but you'll get that gold star over on your head for a longer period of time, if that makes sense.
Thank you.
You're welcome. I'm going to show you all one picture. I know that nobody asked, but I told you about the oldest credit card receipt. But I'm really very curious to show everybody this because I just love this. This is made out of clay. I hope that you can see this. Good. Okay. And this is a clay tablet. Look at this. It's from the 2nd millennium BC, from Mesopotamia. But this is what credit is. The inscription says that someone by the name of Amilmira is going to pay 330 measures of barley to the bearer of the tablet. My guess is Amilmira was a nice little guy in Mesopotamia who needed to plow his field to plant his barley, and he didn't have oxen to help plow the field. He borrowed oxen from somebody. That was his credit. And he gave him this and said, okay, when my barley comes in, you get the barley back. And when that is the case, that comes clean. So that's the oldest credit receipt that I've ever seen. Okay. I know that we're like painfully close to the end. I cannot do enough to encourage you all to get in touch with the Financial Empowerment Center. We do great work. If you get on our site, you can see bios of the counselors and see what our areas of specialty are. You can then see our calendars and book an appointment. And we will help everyone with their individual goals. We don't have a one-size-fits-all solution, but I do, you can tell, I love talking about credit. So